Hi, this is Randy Finney with the right side of the chart, and this is a closing market wrap for Wednesday, January 31st, 2024. So we now have the Fed meeting out of the way, and I wanted to do a video, nothing major today, but I do want to just kind of, this is the week where, things can happen. So I want to do frequent updates. Watched Powell's Dog and Pony show, and was a bit surprised, and in fact, well, we saw it later in the day. I started to do this video early and before the market closed, about half an hour, and was saying that I was surprised the market wasn't down more than it was, but I took an important phone call. I decided to just finish it. It was going to go till the market closed anyway, so that's why I'm restarting this video. And where I'm going, it did sense sell off. Let me just pull it up. See. Probably have no idea what I'm talking about here if you don't sit in front of the computer all day. So this is today. This is a 1 minute chart of QQQ, the usual kind of grind pre-Fed, and this is where we opened today. Kind of there's your, this is yesterday's close. There was the gap downs. The Qs tried to go above the open. Then the FOMC meeting, it started to rally, and I mean that was just a great shorting. If you listen to Powell, I mean. Okay, so pretty much what I was saying earlier in the previous video is that a very, very large part of the big rally we had in 2023 was predicated on the fact we were going to see rate cuts, and the market had gotten way ahead of Powell and had it aggressively priced in. And they had, I believe it was at one point not so long ago, it was, I believe, a 90% chance of a rate cut in March. Well, Powell pretty much just took that off the table today. He was a bit more hawkish, at least in when we're going to get the cuts. If you listen to the comments, he pretty much just said, yeah, things are moving in the right direction, but we want to continue to monitor. We don't want to pull the triggers too early, so we're going to wait to just make sure we're right and a little more evidence. So again, it wasn't, it's still... What you got from the meeting is they still plan to cut, but and they may not be cutting as soon or even as much as initially indicated. So that was conference starts at the announcements at 2. Conference starts at 2:30, and I don't know what people were thinking, but this is typical. I talk about it all the time. On a Fed day, you're almost always going to see an initial reaction and then a equal but opposite reaction, and then sometimes even yet another one there. So far, this one, that was the lasting reaction for today, the initial fade of the pop. So, all right. So, anyways, from a fundamental perspective, I don't see who bought anything he was saying. Why but it's black box trading, the algos, all that stuff. Anywho, okay, so that's what happened today. And so we closed down 2% on QQQ. Let me just cover the charts now. I always say a couple things. I say, don't read too much into any move on Fed day or the initial reactions on a big earnings report. What matters to me is not how much the fact that the Nasdaq was down, the biggest drop in quite a while, 2% down day. More so what happened technically. And so the levels I gave you in previous videos on QQQ, we closed right on that trend line. There's that 60-minute uptrend line been covering. There's our divergent high. There was that little shelf of support. And I mentioned in today's earlier video, and forgot to do it, I told you it looked like a little mini Head and Shoulders, that I was going to cover NQ, which I will right now. I just want to say that's where we ended the day. We ended the day on support. And here's NQ. This is my 60-minute chart as well. I have it drawn a little bit different. That trend line would come in. Same trend line comes in. It probably goes a little left of this chart. And then this is, if you draw it this way, I'll just leave these divergent lines up. I have a different set. Remember, there was a trade here. We had a sell signal there. Sell signal 1 hit the first target there, bounced, came down, hit the second target. This is where we reversed, covered shorts, went long. It was a beautiful little bullish falling wedge, divergent low. And then so far, and that's what we did. And there's that comparable, again, it just takes the form of a little mini Head and Shoulders. And we broke down today, and that's it. So we're coming up, and you have price support right here. So that's probably it for tonight. Or maybe a little more downside, but possibly not. Again, I think market participants might take in what Powell said. Now, remember, we have Apple and Amazon tomorrow night, so no big fireworks. Well, maybe, but probably not until they're out of the way. So that's it. So I had that trend line and I'll add it back there. That's it. So we closed at trend line support. That was our divergent high on the 60. And what else is there? Let's do this. I'm probably boring you to death going over the same charts over and over. Let me just go to, I answered some questions under the last post, and I like to do that from time to time. There's some good questions put out on the site. Others might benefit from there. Let me zoom in. And first one, where's the link? In case you missed it, it was right underneath the video today. When you see the little squiggly lines, underlined in italics, that's a link, and that'll take you to that article I referenced that showed some of the reliable inflation or recession indicators. Okay, good question here. If QQQ goes down, wouldn't Tesla go down as well? Are you recommending to go long in Tesla because it's oversold? I'm not going to read the whole thing because it's a little long-winded, but I didn't recommend Tesla as a long. What I was saying is I certainly wouldn't short Tesla. If any of them, that's the one I'd be buying, of the Mag 7 or whatever we call them, former Mag 7 FANG, because it was at support. And again, as I showed in the other video, it hasn't been this oversold since October of 2022, and we know what happened then. It was an explosive rally. So pretty much, here's it, in a nutshell. If I were more bullish on the stock market, I would probably go long Tesla here. And I think a case can be made also for those that are short the market to maybe go long Tesla as an indirect hedge. But here's what I wanted to, this is the devil's are in the details. That's why I have these long-winded answers. So here's how, from my experience, it works. Okay, should we get a very impulsive market drop? Just go with me. Let's just say, for example, that the market just craps out after Apple and keeps going down. We start getting an impulsive drop. I'm talking double digits, 10% plus over the next few weeks. What we call a broad-based sell-off. That will most likely bring Tesla down. It's been my experience because of the indexing effect. In strong bull runs and strong sell-offs, everything gets sold indiscriminately or proportionally to their weighting. So Tesla being one of the top components of the Nasdaq 100 and S&P, just that simple fact, when you have that kind of selling, people are pulling money out of their 401k index funds, or pulling out of QQQ, and then QQQ and the Schwab S&P 500 index fund, they have to sell what they have proportionally. If $1 comes out of a index tracking fund, what is it? Whatever it is, I'll tell you right now. Or on QQQ, let's say, for example, $1 comes out of QQQ, and of that, you're going to have to take out about $13.20 or 13%. I'm sorry, of that dollar. Because that's the weighting of Microsoft. And then same thing with Apple. Apple represents 12. So to keep the index in balance, if they're getting hit with a lot of redemptions, same thing. When money's flowing in, that's why they have that automatic bid effect from all money always going into 401ks and stuff. And then when everyone else is bullish, they're putting other monies into the market. And these guys take the lion's share of that. Again, in index funds. And also you can say even outside index funds, because they're the biggest companies. There's more shares, they're more popular, and you're also getting individual buyers of those. But it works in reverse. So now what I went on to say is that there are times if the market doesn't go down very hard, again, not one of those called waterfall type sell-offs or a big explosive rally, it is possible for Tesla to rally. Just like Tesla has been dropping most of last year while the S&P 500 went up. So you look at, or QQQ, you look at QQQ, it did this, and yet Tesla didn't do that. So what I'm trying to say is a stock, even one of those top stocks, it is unusual. Normally you don't see any of those top components, especially the top 5, 6, or 7, go against the herd, but that happened before. And so hopefully that makes sense. And so again, I mentioned earlier the extreme oversold reading. Last time we were that oversold was right here, and you can see what it did. So oversold is not a buy signal. I say that often. I say it all the time, but it bears repeating. Just like positive divergences are not a buy signal, negative divergences are not a sell signal. Oversold is not, overbought is not a sell signal, because if you shorted Tesla right here when it first got overbought, actually it's the red line, or you got out of your long, well, you left a lot of meat on the bone. And if you were short, you got wiped out. So you don't short something just because it's overbought, and you don't buy something just because it's oversold. Because let's do that again in reverse here. If you waited till it crossed the 30 oversold level and you bought it just because it was oversold, well, guess what? You lost 16% from the day it hit the 30 level on the RSI. Now it's extremely oversold. So the odds start going up substantially at this point. And so that's it. So hopefully that makes sense. I see limited downside. If you put a gun to my head and said you have to buy one of the Mag 7 right now and short another, I would be long Tesla and short I don't know, Apple, Amazon. I'd have to look at individual charts, but one of the bigger ones. Okay, so let's move on and continue the Q&A. Can you give the latest marked up static chart at NQ? That's what I did. And I also gave a little scenario in there. That was earlier today. We broke, that's that level I showed you on QQQ today. We took that out. And here's the support I just covered in the beginning of the video. 17,166-ish. Probably get a little bounce there. Could carry that high overnight. And if it does, what I can tell you, if you're an active trader, you can game a bounce, set a stop there. Keep it tight, and if you can get up there, a back test of that trend line, that would offer an objective short. And then heading into tomorrow, you'll probably see some more nervous profit taking. I'd be surprised if we don't, especially with what, how Powell's comments went today. I think we'll see some more profit taking out of Apple and Amazon, and then after they report, if things get ugly, this is what we do here. Remember, these are all targets from back before. T1 hit right there, T2 hit right there. We reversed, we covered that short, but I left these on as potential T3 and 4. And they're still potential targets now. But it's not as if we rode that out. Again, it was covered, posted going long, covering shorts. We went long Apple there and everything else. So, well, anyways, I'll update that chart. And I'll keep updates here for the futures traders. I'll keep doing the updates. I'll try to incorporate them on a pretty much a daily basis for the next week or so here, as volatility is likely to pick up. Okay, another one I want to share. Somebody asked about my thoughts on biotech and particularly LABU. Broke its upward channel but hasn't responded to rates. Okay, so first of all, and I feel strong about this, I prefer, even if I'm trading LABU or LABD, for those of you not familiar, these are the 3-time long and 3-time short biotech ETFs. And there are other biotech ETFs out there, but XBI tracks the same index as these two. So they all three of them track the S&P Biotech Index. So these two just have the juice. And so if you look at in the FAQ page on right side of the chart, it's under resources. I have a whole thing I wrote up years ago explaining how that decay thing works. And here's what it is in a nutshell. The higher the volatility of an instrument, think natural gas versus treasury bonds, for example. Treasury bonds have very low volatility. Usually a strong day up or down in a treasury bond ETF is 1%, right? Biotechs, not nearly as volatile as natural gas, fewer things are, but they do tend to go up quite a bit. I've seen them up 3, 4, 5% in a day. They're more volatile overall, the biotech sector, than the market, right? So therefore, over time, the decay and again, I write about it, and I even show the math, how it works. It gives you a distorted view of the chart. So if you're charting LABU, especially on a daily or weekly chart, or LABD, it's going to give you a warped picture of how the prices, technical analysis is all about where buyers and sellers have met in the past and where key levels are. So this is what I see when I look at this. I see a big trading range. I see 2 spikes below it. If you wanted to, you could even box that in as the range right here. This is all of 2022. So here's 2022, January, 2023, 2024. So that's a 2-year trading range. And what I went on to say, if it can pop that, solid and sustained breakout, that's bullish. And the top of that's about, I don't know where I had it. I think I might have said 97. It looks like closer to 98. And right here is about 95. This is the last two peaks. However, if it broke out tomorrow or next week, let's say, it wouldn't be a breakout I would chase. Number one, my reply was, if the market holds up, if the S&P 500 and the Nasdaq, by the way, the Nasdaq, I think biotech is the second largest behind tech. That's what makes the Nasdaq 100. It doesn't have financials, it doesn't have other things, not very diversified, but it does have a lot of tech stocks, mostly tech, over 50%, and quite a bit of biotechs. They tend to list on the Nasdaq. And then the bigger biotechs get included in the Nasdaq 100, which is QQQ. So that's it. That's the takeaway. What I circled here is extreme overbought readings. Again, overbought is not a reason to sell, but it is a reason to, hey, you may not want to be buying when you're coming off, when you're at extreme overbought readings. The last time we were overbought was right there. You can see what happened to prices. In fact, really from there, we never went any higher. We came back up almost as high, but we ended up all the way here. So you had about a year and a half of losses. And then the time before that, we got to go all the way back to right here, right when the bear market started, and you got that. So the odds say, especially if you happen to agree with my outlook on the market, we're in a bear market, but probably the next stop is probably going to be way down here. When I look at this, now, normally you might say, okay, Randy, why don't you short them? You're at resistance, you're overbought. Maybe later. First of all, I have to look at the individual components. There's more variance in the charts between individual biotech stocks versus some things like gold miners. The gold miners all tend to move in sync, very tight, because they're all responsive to the price of gold and or energy. It's their second big variable, and they tend to move up and down together. But biotechs are a little bit different. One company may have a blockbuster drug in the pipeline that's about to clear phase 3 clinical trials. The other might have only one single drug and it's hoping, and then boom, that gets denied, shot down by the FDA. And so they're not all equal. So I do like to look at all the components, or at least the big ones. And what I could see here, I'll watch this. If the market or the biotechs rally and we get up there anytime soon, I'm drawing it out here, we'd have some potential negative divergence. We don't have it now. Then I might be looking to short either a breakout or a failed breakout. But again, I can't make a case to go long because we're at resistance and overbought, or just below resistance. But feel free to bump me again in a couple months. Maybe we break. And if we do break out, by the way, guys, if the market can hold up in 2024 and I'm wrong on my longer term market outlook, biotechs are likely to really shine if they can break out of the spacing pattern. Otherwise, it's just a, stair stepping down in a bear market. Let me pull it up because I'm sure there's others interested, and go to a weekly chart. And this is what my weekly looks like. I'd probably work its way down to this longer term uptrend line right here. You can see that comes off the 09 lows. I'd have to, again, dig a little deeper. This is just a kind of a cursory look at the biotechs. And, question was put to me for LABD or whatever. So this is the one I look at. But there's IBB and just going from memory. There's others out there. And I like to look at all the different biotech ETFs and then come up with but I can just tell you, I wouldn't buy it here. I wouldn't be a buyer. If anything, but I'm not doing it. I would short with a stop somewhat above that. You can see right there on IBB 138.65. That's a big level. And so let me move on. Okay, what's the next question? Oh, that's it. Okay, let's not forget the big three: Treasury bonds and the euro. So the euro was, it's just like the stock market, which again, highly correlated. This is today. The press conference, it started to spike up, but then when he kind of reiterated or made very clear that, hey guys, don't be looking for a cut, next month, most likely, we're really want to see some evidence. I guess he got a lot of pie in his face with that whole denying the inflation transitory thing, a year or two back. And so either way, so then what that means is, so it's dampened hopes. I'm sure the trajectory, the dot plot changed. The futures, I didn't look at them, but it goes without saying, March rate cut was probably wiped off the table, or mostly. And And so then what that does, it makes the dollar go up, because if we're keeping our rates, all of a sudden, if market expectations are for higher rates, or at least not a rate cut as soon as possible, as soon as expected, then that means the dollar then goes up in value against it's paying more, if you will. Our interest rates are higher than relative to the euro, which is the biggest component in the dollar index. So it went down. Now we still have this divergence. Here's the thing. I'm a little bit, I don't think it's time to get too heavy long or short anything until at least Apple and the other ones are out of the way. But there's that trend line I've been targeting for a long time since this divergent high, and we're getting very close. In fact, we're almost there. Doesn't mean it can't break, but something may happen in the next day or two here. And again, there's your downtrend line, a little wedge. This is the daily chart here of Euro USD. And remember, this is, it's not hard to show you. Just compare it to the stock market. You can look at QQQ in this example, and you can see that very strong, unmistakable positive correlation. They go up and down together. Lately, there's been a disconnect, and I kept talking about that. I said the one or the other is going to get the memo. The euro has been falling, EUR USD, meaning the dollar's been rallying, and yet stocks didn't get the memo, and they started to get it today a little. We'll see. This is still how I expect the mean reversion to play out, the return to the norm. We'll see. Otherwise, we do have the euro coming up on support. I'd feel much better and probably increase short exposure if and when that trend line on EUR USD was solidly taken out. And I'm talking about this one here. Let me just give it to you on a clean board. This is it here. I'll just color it up so you can see it very clearly. Make it purple, make it big. That uptrend line. So until then, if it happens to, if we bounce off there, then that should be net bullish for equity in the near term. It could give us new highs in the indexes and all that, but they'll still be, as I've been talking about, marginal new highs and divergent highs. Okay, we'll just wrap this video up looking at the Mag 5, you want to call them Mag 7, whatever you want, these big leaders. And just an update. So yesterday, we already had Microsoft report on, it was yesterday. And there's that big red candle. So that is a breakdown all day long. Again, this is an update. I showed you these lines. And you don't have to squint to see. Remember when I was first covering it, we were over here in the previous video, just below it. Yeah, that's a breakdown. That's a sell signal. Nothing's guaranteed, but I see that. I see the PPO poised to make a bearish crossover, which will only confirm this big divergence that's been building. And so that's it. Sell signal on Microsoft, so another leader down. Remember, I do these little check boxes. They've reported. And so for my bearish case, I get a check mark for Microsoft. We have Apple tomorrow. Well, Tesla's already been dead. I'm just, saying, what to watch for now. So there's Microsoft. Apple reports tomorrow. You can see them already starting to get nervous in front of earnings. But again, things can change tomorrow. Can and probably will one way or another. I already gave you the support levels in recent videos. First support coming up here, 181.30-ish. The 200-day moving averages, which tend to cap pullbacks on an uptrend. But once they're taken out, clearly taken out, then you're usually starting a new downtrend. Alphabet, right to the uptrend line I gave you the other day. Haven't touched this or modified it since the last video. There it is. They reported, boom, closed on support, just like QQQ. Remember, QQQ, that 60-minute trend line is also shown right here on the daily, and we're right there. So Alphabet at support, and as I like to say, support is support unless broken. So odds favor probably a little bounce, maybe into tomorrow. And with the QQQ at support and Alphabet. But if and when this trend line goes, and more importantly, when the trend line on QQQ goes, but it is a check mark. This is post earnings. That drop is, what is it, down 8.5%? I'd say that's you can't completely write it off. Right now, we're basically back testing the breakout to new highs. But if and when it continues lower, especially my purple lines, that's when I'll give it another check mark or an even bigger check mark. But so far, so good. I like what I'm seeing for the bearish case, following earnings. Amazon broke down, but it broke down in front of earnings. So you have to take any breakdown that occurs in front of earnings with a grain of salt. But I'm talking about this little trend line, the minor uptrend line, the wedge. That's a daily chart. You can see it clearly on a 60-minute chart. Earnings definitely have the potential to either foil the breakdown. So if we get back above the trend line and close back above it, great. Otherwise, any pop up to it tomorrow would be an objective short entry with a stop somewhat above. Or, of course, this has the potential to send the stock a lot lower. It's already on a sell signal today. Again, a questionable one due to the proximity of earnings, but good support here at 144.28. And then my primary uptrend line right there, which also comes in with the 200-day moving averages. So if and when these levels, this is big because you have, again, the 200. I don't know if you can see it in the video. There it is, 200 exponential in red, 200 simple moving average, 200-day simple moving average in blue. They come in right with that primary uptrend line off the January 2023 lows, and that should be quite bearish if it breaks down. And I always try to talk to the bulls as well as the bears. Right now, my outlook on the market in these stocks, but if I was bullish, here's pullbacks that you can buy. 144.28. Again, I said it's a level to watch to maybe short sellers can add to a short or take a short. Likewise, those looking to buy dips. I know there's at least one of you on the site very actively talking about buy everything, keep buying dips. Those are your levels. And then that purple trend line. And so it's just a matter of perspective. If you think the market's going to new highs and beyond, and it very well could. And maybe you have no opinion. Maybe you're a complete market agnostic. You just trade the technicals. It's objective to either short breakdowns below those levels with stops somewhat above, or buy pullbacks to those support levels with stops somewhat below those. NVIDIA, I told you yesterday, broke down. It's not doing much so far. Meta right there, uptrend line. They're also reporting tomorrow after the close. Tesla, we've already covered. And then Broadcom just kind of rounding out because that's if you want to call it the Mag 8, that's the 8th largest component of the Nasdaq 100. And also a key semiconductor stock. And right at trendline support. So that's it. We'll end it here. There's also a reaction high. I'll put the line there, see previous reaction high. So these are the levels. If you want to watch these 8 stocks and set your little check. We already have check boxes on quite a few. And, if Broadcom breaks below there, that's another check box. In other words, increasing the odds that the Nasdaq 100 is going to fall further. And like I said, even if it has another thrust up, these divergences are so big, so clear. There's a lot of evidence in the charts that I think it's an objective time to be short. I've been saying that, and just maybe wait until Apple and Amazon and Meta are out of the way, either after tomorrow or into next week before getting too aggressively short. Likewise, if you want to get aggressively long, you can do it. I just wouldn't do it with your money, not with these big divergences, overbought conditions, extreme sentiment, distance away from the 200-day moving averages. There's 101 things that say, at the very least, you don't buy here. When you get too far away from the key moving averages, like right here, I'm talking, you can see the blue and red lines. There's usually a reversion to the mean. You got too far below them there, and you're way above that. And I even have that indicator here somewhere. Percentage above 200-day moving average. You can just put it up, see how that looks. You can see it on everything. Microsoft, Apple. Apple's actually kind of stalling out, not so much. Amazon, NVIDIA really peaked out there. But like I said, in Broadcom, it kind of stood out to me. And that's why I toggled on this indicator. I wasn't even thinking about doing that before the video. And that's likely going to come down and visit those 200s again soon. Alrighty, let me wrap it up here, and sometime tomorrow, especially if things are slow, I'll do another update. I'll give you either some static charts, screenshots, or another video on all the other stuff. Treasuries and gold, silver, platinum, palladium, grains, and things like that. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.